Good morning, everyone. Welcome to TopstepTV, the London session. Just going to make sure that audio and video are all going out. I think video is okay. So everyone let me know if you can hear me. I had some puppies who were playing around, so hopefully they didn't disrupt any cables. If you're here for the first time, my name is Deeyana Angelo, aka Market Stalker D, and I've been trading for 17 years. 12 years out of that, I've been trading futures. Now, I specialize in slightly more alternative markets, such as crude oil, precious metals, and in particular, RBOB has been on my radar this year purely because it's more liquid. So we're going to be going through some of the analysis of the two. Now, if you have a look at the dome of gasoline futures, which is what I have on this side, you will see that it's a pretty kind of gappy, choppy dome with some contracts having some prices having a few contracts, then none. So that is something to take note of if you're going to trade this in live. Now, if you're still in XFA and in combines, this is not really going to affect you. So it's more for those of us who are on live, because sometimes if you are trading the London session, you might find that if you want to execute at, let's say, 192.95, but there's no prices there, it's going to wait until it actually finds a counterparty to your trade. So therefore, you may experience more slippage. And that is always the case with any thin market. And also thin market is NQ, so that can happen in there as well, especially when we have news events and they're waiting for something. You see a lot of that happening. So that is just a function of the live market environment, nothing more, nothing less. For those of you who are like, oh, Topstep gives terrible fills, it has nothing to do with Topstep. It is all to do with the fact that there's not enough contracts available sometimes. So just keep all of that in mind when you're trying to trade some of the thinner markets. All right, so let's have a look at who's around. So let's do a bit of a roll call. So we got 8 Mile Style. Obviously, we got Bruno with a disclaimer here. So everything we say here is for educational purposes only. And yes, I am a Series 3 licensed trader. However, I'm not a CTA. Even though I could be if I wanted to, but for now I am a holder of an active Series 3 license, but that doesn't allow me to give you any signals or anything like that. So take that with your own plans. Whatever I say here, make sure that your plans are also saying a similar thing, or if they're saying something different, just follow your plan, right? But it's a good educational practice to see how other people are doing their analysis. So with that in mind, I'm going to start on the weekly chart of crude oil and RBOB. Now, they are pretty correlated. However, there are some differences because one is more liquid. Puppies are saying, yes, do the weekly chart. Do the weekly chart. That was somebody at the door. Obviously, I'm going to let that pass, and they can just leave whatever they have for us on the side. Thomas Swinton says, did I have a good birthday? Yes, so it was a great week. I actually had a few dinners, so people were honestly trying to kill me. I don't know what it is, but these days, whenever we have any kind of events, it's exceptionally difficult to get everybody in the same sort of spot. All right, hopefully that's all over and done with. So yes, I had a good week. Obviously, we went out a few times, and like I said, it's exceptionally difficult getting people all on one day, so it was all kind of dotted around throughout the week, and that culminated on Saturday when we went to see some more friends, and we actually went down to Weybridge, where my best man lives with his fiance. And then we saw some more friends. So yeah, it was a busy week socially. And yeah, it was a very nice way to celebrate my birthday. So that's all good. My birthday is always a bit of a weird one because it falls in this like Christmas season, so everybody wants to do a whole bunch of stuff, and I mean, you know, I like seeing people, but I'm not that. I suppose I'm not that keen on going out anymore. Anyway, let's see what's going on with the weekly chart. So weekly chart, as you can see, RBOB is actually creating what Dolby refers to as a Dorito pattern. We're kind of in the middle there, but one thing to take away from RBOB is that it heavily correlates with crude oil, so they will look ever so slightly different. So I actually use crude oil as a guide, almost like as if you're trading ES and NQ, and then you look at ES for clues because it's a thicker market, it's a little bit tougher to move, and it's the same thing with these two products. So for example, right now we do have a pretty nice range on crude oil, and you can see that we tried to go all the way down below the previous weekly low. So remember, this is a weekly chart, which is doing like a huge big analysis of where we are. And you can see it tried to go down, but it promptly turned around and went back into the range. For now, coming into the Christmas period, I don't think there's any particular reason to say that this is going to break. Obviously, anything can happen, but whenever crude oil gets stuck in a range, I like to just try and get my trades somewhere within that range. Obviously, intraday, there will be more opportunities because sometimes you can run a trade down to some of the interesting areas lower. And then, you know, snipe it back to the other side. But it's important to keep note of where the interest actually is on these super large time frames. If I zoom out a little bit more and we look at the volume profile, you can also see clues about where the lower volume nodes are. So what does that do? Well, if you're not particularly well versed in supply and demand analysis, volume profile can give you a very kind of a simple way to look at what is the middle of the range, what you should stay away from, what to expect, and how to formulate your plans. So right now, crude oil has a very thin volume node at 65.33 and lower. So that would be my sort of either a target for any shorts intraday or potential longs in and about that area. I'm not saying that we're going to be using a weekly chart for that, but it's a good starting point. At least you know that when it gets down to 68.33, so somewhere down here, that you want to be a buyer. You want to look for the evidence of buying, which means then you get to zoom into the levels as you go through the time frames. And as you start breaking down some of the methodologies that I use, like for example, market profile, options data, algorithmic ranges and stuff like that. So, you know, just to get like a better area where you should be positioning yourself. But from a weekly time frame, we do have some space down to that low volume node. So that's kind of what I'm looking at for this week. So this is not necessarily just for today. It is a weekly outlook. And because crude oil volatility is now pretty low for what I need, I'm not very happy with it doing like 100 tick ranges throughout the entire session. So I actually like to express my position in RBOB instead. So whatever levels I find, I effectively convert them into RBOB and then I trade that. RBOB is moving much better than crude oil. So this is why we're doing that, because you always need that movement, that momentum. If you find yourself in a dead market that just doesn't go anywhere because its volatility has gone down below some sensible levels. That's not favorable for intraday trading. So if you don't keep tabs on that, you're going to be stuck in a lot of trades that are just like watching paint dry. And that can be a trigger, mental trigger for some people to start doing stupid things. You get a whole bunch of paper cuts and you're like, oh, this is shit. So to avoid that, I like to look at those volatility indexes on the CME website, which can provide some clues on what's moving, right? Just as a general thing, not maybe on a day-to-day basis, because you can always have an event that pushes a particular product into overdrive. But generally, those couple of things, so, supply and demand, volume profile, and then the volatility indexes, that is sort of my basic analysis of should I even be trading this today or this week. So again, let's go through that kind of due diligence of looking at what the volatility indices have done. And we know that copper had like one day last week where it actually moved and then nothing. And I don't know whether that's going to be the same thing for today, because I can see that it did move. Yeah, so copper for me, you can see that it's still kind of falling, and I like to see copper at about 25 volatility index, and right now we are a little bit below that. So where are we? Let's see. Yeah, so it's below 20. And to me, that's just not good enough for me to get involved in any copper trades. I see that Eurex kind of pushed it and then it just died a death. We can have a look at the chart, but for now, the way I'm seeing this has been very, very quiet for second part of NYMEX initial balance and all the way through London. So there was just like a big pump after Tokyo session ended, and then it just went up, and now they're just like, we found the price agreement. And how does Coach Ray say? They found the price agreement, they're all having margaritas, and everyone's comfortable at these levels, and they're not really planning on doing anything with it just yet. So until that changes, until volume picks up in copper, and until this volatility index generally goes above 25, I'm not going to be touching copper. Now let's have a look at some other metals. All of the volatility indices on metals are all still falling. You can see it's all negative. Even platinum is now slightly below that 25 volatility index. So that's not great. Let's have a look at energies. Energies are kind of hanging on. For crude oil, if I'm going to trade crude oil outright, I really need to see it over 35, ideally 40, 45. So again, this is pretty low. And the only other one that has been moving is natural gas. So that could be an idea. But yeah, so, be careful. If you trade like multiple products like myself, you need to have some sort of a way to figure out whether you want to be involved in something. Now, gasoline futures don't have a volatility index, but I like to measure it through the average session ranges, like how much does it move in a particular session. And right now it moves a lot better than crude oil. And obviously crude oil can be your guide as to whether RBOB is also moving or not. However, by default, RBOB is much more liquid. So that's a couple of ways to keep an eye on that. Now let's move on to like some more intraday levels. Let's have a look at the 4-hour chart. Four-hour chart looks a little bit bearish. This looks like a bit of a correction during Asia. But for now, because we're a little bit further away from that bottom of the range, I wouldn't be opposed to doing like some shorts at some point today, if we can find them. So do I have any levels of interest here? Right, so we have overnight VWAP that might be useful in our OODA loops or ODA loops. And RBOB is actually already teasing the overnight VWAP. So let's drop further down to a 30-minute chart. So this is overnight VWAP on crude oil, 67.78. And then much closer on RBOB at 192.59 ballpark. So if we get some weakness there, that could be a decent thing. I've just seen them flash some orders to the downside. So we refer to that as, oh, there's liquidity down there. Yeah, there is. The industry has kind of adopted the term, oh, there's liquidity below, because that's kind of what it is. But whether that's the right way to describe it or not, that's up for debate. However, it can be a clue of where they want to take it in order to push something further. So that's why it's important to keep an eye out on the dome. And RBOB is so thin that these larger orders are actually really easy to see. So they flashed a couple of times and then they sort of disappeared. So they may reappear at some point, and then that can give you the indication that they're going to take it this way or that way. Now, for now, it seems to be a bit of a spoofing moment. But yeah, we'll see whether those larger orders still remain, and then couple that with the weakness around VWAP, and we might have a signal of some sort. So we'll see what happens there. It is a little bit early to be trading RBOB, but that is the plan for today. Talking about intraday stuff, crude oil and RBOB did open inside value, both of them. Just check that. So what does that mean? It means that the big moves, if we're going to be planning any big moves, can really only happen if we get a gamma flip intraday. Now, the gamma flip level is something that you can look at from, like, let's say Mentor Q, and they call them HVLs. They call them high volume levels. So what does that indicate? It indicates that once the price goes over that and then picks up speed, effectively it changes the gamma environment from either negative to positive or from positive to negative. And that can change the day's sentiment. So if we started off in, let's say, open inside value, they just didn't really do much with it, and then we reach one of those levels and run through them with quite a lot of power behind it, you can suddenly find yourself in a trending day. And I've seen the inside days open quietly and then go through one of those levels, and suddenly you're in a trend day. So we'll see whether that happens. It's very likely that we may have a pretty decent movement down before they do anything else. But first line of resistance there would be weakness at VWAP. Like I said, our VWAP is closer. So if we can get crude oil doing the same thing, that would be my first area where I want to look for trades. But crude oil is not there yet, so we have to wait. And then for targets, if we do get a short, one of the targets on crude oil that I was looking at earlier was 67.50, so more of a scalp. And then depending on what happens around 67.50, maybe we get another trade later on to go through that level. And then we have some more space when it comes to algorithmic ranges all the way down to 66.86, where it's average daily range low area. So when we reach somewhere around there, it becomes dangerous to keep running shorts because you've effectively exhausted the day's range. All right, let's see some questions. what do you call TB stores? Is that what? I can't see. It's too far away. Hold on. Let's see. T8 Storm. What do you think of gold buys? So the thing with gold around about this time of the year is that gold typically establishes either shorts or longs, depending on what's happening in the price, for December. And then that tends to stay until halfway through January. I'm not in favor of gold buys, especially because looking at some of my levels, we're actually already exhausting the average daily range high. And we may have a little bit more space. I have some options related levels around 2680, but that's barely like 3 points away. That's not enough profit margin for me to get involved in that. So basically the only way that you can run that is if you're expecting an outlier day. So let's say if we've got some news or something, or you expect some headline risks to come in, they will push gold into an outlier day. For me, that would be a no. So I would be looking at shorts actually from somewhere up here. And then let's have a look at what's going on with gold on some larger time frames as well for context. Because it's Monday, I'm doing this like weekly chart overview. I have some levels from last week. I didn't actually draw them in this morning. I have them on my other platforms, but not here. However, I can talk you through it, so that's fine. Well, volume profile, weekly chart. We're sitting in a pretty thick volume area, although it's not as thick as the one down at 2454. So since they've stopped moving, like if you look at the weekly chart, it's pretty flat. Like there's no trend here. And this is now 1, 2, 3, 4, 5. This is 5 weeks of them not doing anything with it. So I would say this would represent a price agreement on a very large time frame. I don't like to see this, and especially not if we're in the middle of that range. So really, my better trade locations, just looking at this, would be up at 2746 and then somewhere lower at 2600. Where we are right now from that larger time frame, it makes everything more difficult. Because it's difficult to, like, do you want to be a buyer or a seller? Well, I don't know. I don't want to be anything here. I would like to be up here or down here. But, we don't exactly have a crystal ball to know which side they're going to move it. And whenever the large time frames are looking a little bit middle of the middle, that immediately means lower quality setup. Let's have a look at the daily chart. Now, similar thing. We have another range. So there's a range on the weekly. There's a smaller range on the daily. And on the daily chart, in this visible range, we have the point of control up at 2703. And basically, this is, again, another very, very thick volume area with the supply, again, up at closer to 2700. So all of this is a range. Where we right now, again, kind of in the middle. So not really looking that enticing to me until we get to the edges of those ranges. So a bit further up. So if I look at just this visible range of the price agreement, the lower volume area is also telling me the same thing, that until we get to about 2700s, this is all a very thick volume area. Now, what that means is that if you want to run a short or even a long, because of the amount of volume that's comprised here, it's going to be sluggish. It's not going to move quickly. So it's going to be like, oh, we tried to get there, then we get stuck in a chop. And then it goes nowhere for 3 hours. And then you get frustrated and you start doing stupid things. So this is why I don't like to see people trading inside thick volume areas unless we are at the very top. So we had a trending move up to there. And then we got stuck. Now that's a different thing, right? It's effectively the supply and demand traders call that rally base, and then you would be expecting a drop. Now that has a bigger risk reward profile, because you can use a low risk because there's nothing else there. It's the top of the range, but you have all the downside. However, contextually, you have to make sure that there is a range in place, which we do have here. So yeah, 2700s would really be the first area where I would be like, ooh, yeah, let's look at some gold shorts. So I'm not really interested in gold right now. So yeah, wouldn't be my first choice today. Now, on the 30-minute chart, we did open above value, but the problem is we went all the way up to the average daily range high already, and we've kind of slowed down. So where's the average thingy? So 26,782 is the average daily high. So that's a full 24-hour range that was already reached. And look at what happened. So they touched it, started to slow down, and now they're reversing from it. So this was technically there was an auction that was successful, but the initial balance size was only 54 ticks, and then this whole session range is 114 ticks. To me, that's very low range. I don't like to trade anything that is kind of below, really ideally below 220, 300 ticks ADR, and then out of that to have a good chunk of one session to have like at least 180, 220 by default. But really 300 is when things get a little bit easier for intraday traders. Anything sub that, it's like, very frustrating, and the days are not consistent, and then you get into a trade one day and it goes for a bazillion pips, you get into a trade all of the other days and it does nothing. That gets very frustrating. So from that point of view, you need to find the time of the year when everything is moving nicely and consistently, and that's when my average daily ranges can actually be quite useful, because it tells you what the average range actually is. But yeah, it's a no from me on the longs on gold for now, purely because we've already exhausted some of those ranges and we're turning around. So I would want to see it much, much lower. So yeah. Could you please tell us how you're using the DMI indicator in practice? Now, the DMI indicator for me is not like it is a timing tool, but it's more like once I already have a setup, I'm like, oh, is the DMI indicator agreeing? And then once I am in a setup, if I'm running more of a shorter term trade, like let's say I just want a trade that's going to last me maybe 5 minutes rather than my usual sort of 2 to 3 hour D trades. So if I'm trying to snipe 30 to 50 ticks from a setup, that's where the DMI indicator comes in. Anything longer than that, I don't find it that useful, because I'm working off some other things that show me whether we're still trending or not. But let's go down to a 100-tick chart, and then we can have a look. So for example, right now, this DMI indicator is not showing me anything of use. But let's hypothesize, let's say we want to do a short around here. What would I need to see? I would need to see this yellow and white line picking up. But I also need to see this underneath my ribbon, my three EMAs ribbon. Obviously, I already have a level that's not taken from either the MAs or anything like that. It's literally just to tell me, yes, we have the momentum to this side or that side. Now, I have it set on a pretty fast combination, 5 and 10. And let me see if I can find you a good example here. All right, so here we go. Here's one. So this is where where gold went into a bit of a trend. So you can see everything here is kind of going up, but it's sort of a bit sluggish. However, the yellow line and the white line are still showing a little bit of a trend, right? And when they really pick up, when it gets really super smooth, is not until much later on. And then you have a scalp that kind of runs for a good amount of ticks and look at what happens with the DMI indicator. So it's showing you that both the yellow and the white line have risen. They have risen, and they're trending. So once that fizzles out, that would be my exit, if that's the type of a trade I'm doing. I'm just kind of trying to catch, like, let's say I'm trying to catch an initial balance breakout, and I see that happening. Once the momentum fades, so once we get to this point and this yellow line just drops off the planet, that's my sign to exit, right? It can be used as a timing tool for your exit. So that's kind of more how I would be looking at it, rather than rather than just using my eyes and discretion. It introduces a more systematic way of taking earlier profits. But if you're planning a longer term trade, like let's say, I have a copper trade and I want to hold it for 4 hours. DMI on a 100-tick chart or even on a 5-minute chart, it's not going to do anything because it's going to be too large, or too slow. And, I don't like to use those sorts of tools. And in that case, I would just use like a 15 or 30-minute chart. And I will also have a 4-hour chart on another screen to track whether the sentiment on a very large time frame is also doing the same thing. So that's really how I use it. It's more of a helper tool than anything else. Okay, piggy bank. I like your username. Hey Dee, S&P, the Nasdaq. Because it makes up multiple companies, the volume profile is not as accurate because it is multiple different. No, so the volume is volume, man. What the index is made up of, it's irrelevant. What's relevant is what they've done at that price. The problem with Nasdaq is that most people only look at Nasdaq. When you start looking at the whole equities as an asset class, so you have the Mag 7, you have ES, I trade DAX nearly every single day. So I always have that as an instrument, kind of feeler of how the European side of things is doing. And then you have ES, you have NQ. I also look at YM and RTY, right? So that gives me an overall picture of how everything is doing. But when it comes to the volume profile, it is very accurate. Like that's just, I don't know what you're looking at, but volume profile just shows you where the previous inventory was held. Where was the most amount of volume spent? It's a very simple measure. You don't have to complicate it, What are we looking at? We're looking at which area they spend the most time in and which area brought low volume where we moved quicker. That's all you're looking at. So to say things like, volume is not accurate because this is comprised of different companies. What does that matter? Price is price. Volume is volume. Okay? So I would heavily disagree with that statement. Because volume profile is something that a lot of people use. Okay, we have Nick for a tick. One of our top traders. What does he use? Volume profile and options data. Interesting. And yes, we do have amazing traders who don't use volume or profile or any order flow, and they're still successful. Many ways to do this. Now, for me, I want to have as much information as possible. I am a pretty nosy person. And to me, when I was learning how to trade like 17 years ago, I felt that with moving averages and all those like retail, more popular sort of widely spread tools, I didn't feel like they were giving me the full picture, right? So I looked for more information. And it wasn't until I got to the distribution curves, which is the volume profile and market profile, that I really started to truly understand things. And then with the ADR and ASR, which is my invention on the average daily ranges, that offers me even further insight. And, this is why I can be pretty confident in a lot of my trades. And this is why I can also say, hey, let's not go here because there's a slightly better level, just a little bit higher up. So we don't want to be stopped out and then to try again. You've seen me do that in Back to the Futures or whatever they're calling it now, Trade with Topstep or something. because, you know, I am very, very confident in the levels and also in the time of day. So the later it gets in the time of day, the more accurate my analysis becomes because I get more data, right? So some of the trades that I do towards the end of the day are the trades that save my entire day, right? So all I need to make sure to do is to have enough cash on the day in order to reach those times when the edge can really play out. Now, the problem with London is unless you're trading like DAX or something, there just isn't enough data to confidently say what they wanted to do with the day. So one of my strategies is if the day isn't going well, is just to wait until literally like the last 2 hours of the day. Whatever I'm trading, whether it's crude oil, you know, that has its own settlement. But generally, I will be looking to bail myself out of a potential day that didn't go to plan, like let's say first couple of trades didn't go well. I will save the cash, and then until the end of the day, I will do one last trade that would either bring me to scratch or into profits. And that's, I mean, I've spoken about this so many times, even when I ran my own daily live streams on my channel, that, you know, if I didn't manage to find a good trade earlier, I like nearly always can find one towards the end of the day. But the only caveat here is to make sure you don't run out of equity on the day, right? My settings on the day on the VPVR are just default settings. I don't think I've done anything to it. Maybe I changed some colors, but yeah, it's just literally that. So whatever the default is, that's what it is. I don't like to change too many default settings for volume profile. And, you know, I have a software development company where we create these, and there's a reason why defaults are in place, usually. And typically it's because there's either some studies or research that was being done into what is the best setting for that particular thing. Like, to take the very basic example, why do we have 70 and 30 on RSI? Because someone, somewhere, sometime, when they were creating RSI, they tested a whole bunch of conditions. And they're like, well, what is the most frequent turnaround for this particular indicator? And then they pegged 70 and 30, right? Now you can agree with it, you can disagree with it, but there's no doubt that there's something to it, right? Even if it's like, oh yeah, it doesn't happen all that often, everything is contextual in trading. Someone, somewhere deemed that 70 and 30 were the levels of interest for RSI. And similarly, you know, somewhere, someone figured out the VPVR works best when you have, you know, 24 levels and up and down sort of 70 rows, right? Someone figured out that is what gives pretty decent results. So whenever I'm looking at creating something new, obviously we do our research on it. But if we're not creating something new, we're not going to reinvent the wheel. We're going to take the studies that have already been done. So for examample, if you're looking at the ADR and ASR, for the most part, 14 days is what everybody uses to figure out what that number should be, okay? Now, sometimes if you have a contextually different seasonality or whatever is happening, like let's say you know that something moves more, but for the last 2 months of the summertime, everything's gone pretty dead, you might want to expand that number to like 3, 4, or 5 months to smooth out that curve. And similarly, if you had the last week that completely went crazy and overshot everything, and keeps overshooting because of some headline risk that is still in focus, you can lower that amount. You can say, well, what was the ADR over the last 5 days? So it's all contextual. But as a default, 14 is what they figured out that, you know, is the best kind of time frame to give you the most accurate results of ADR and ASR reversing, right? All right, so we have some reaction here from the ADR. So I'm going to go down to a micro gold. Again, it's Monday. Don't really fancy putting too much of a dent if this doesn't work out. So I'm just going to try doing, so let me put the real GC down here just to grab stuff. Whenever I'm on a 100-tick chart, I do prefer to use the full contract Did that just change? Or did I change that? I don't know. All right, there we go. So I want to see just a little bit of commitment here, because they're trying. The curve of the ribbon is flattened. We have some reaction here that was, you know, pretty quick. So velocity is one of the other things that I look at, how they come off the levels and whether they reclaim it or not. And this kind of caught my eye. So we're going to see whether there's a follow through. But we do need the DMI to start picking up right now. It's still not doing that. Everything's still pretty flat. There is a little... Let me just see the 5-minute chart here. Yeah, so let's wait for the 5-minute chart to finish, and then we can see whether they have a candle without wicks. So one thing that I want to see in 2 minutes is that this candle doesn't have a wick. And, you know, we want it to reclaim the ADR high with some confidence. If it's got a buying wick, that means there's still like some sort of passive buying happening. Even if they're not getting a follow through, somebody's still buying it. So we don't want wicks. When you're looking for reversals, you need almost a Maribozu candle, effectively. The good thing is we still don't have a higher high, and this is like 5, 10, 15. So 25 minutes, we didn't manage to find a higher high. And we're definitely running out of steam here. We just need a good, dedicated reversal candle before I risk anything on this, even like $100. All right, we have 57 seconds left for the 5-minute chart. So we'll see whether 15 minutes is still looking a little bit bullish. It's still technically an up candle, but that might change. All right, let's see how they finish it. For now, it looks okay, but sometimes they step in the last sort of 15 seconds and they create another buying wick. So we don't want that. So if it doesn't end as a confident Maribozu candle, it's still not time to short it. No, so that's a no. This is why you want to wait for the next time period. So there's a way to see what the algorithms want to do with it. If you're aiming to enter something towards the end of 15 minutes, 30 minutes, 45 minutes, and top of the hour, there are certain algorithms that operate at the time when they're sort of taking profits or maybe putting on new positions. And this is what drives this sort of a price action. So if you can get a dedicated reversal that doesn't have the other side stepping in, that tends to be a stronger signal. But when you get this, it's an invalidation of the signal. So two things happened here that I didn't like. Yes, I have a level. I was looking for a confident move below my level of interest, which was ADR high, and I needed a sort of unequivocal sign that somebody wants to sell it and doesn't want to buy it. That's not it. So we stay out. For now, there's no higher high, there's no confident reversal. They're just still in that comfortable range where they're like still chilling, still not deciding what to do with it. And I don't want to be a part of that kind of a move. If you're looking for a mean reversal, which is technically what this should be, this doesn't look that way, okay? When they start into a mean reversion, it's usually very quick and it has a lot of velocity. It looked like they were starting it, and then they just went, no, actually, we're good. There's quite, let's see, Edward Kendall says, there's quite a bit of liquidity at 2680. Do you not expect that to get taken before mean reversion? Well, no, because technically ADR high is not 2680, it's 2678.3, right? 2678.3. And, you know, 59, if it goes higher, if it goes to 2680, we then have something else happening. Having 59 contracts up at 2680 means that they want to take it much higher at some point, right? So this is not an area where you want to go to and then go short from, because when you have liquidity to the upside, those sort of orders are never a stopping point, or very rarely will be a stopping point, unless there's a stack of them and there's like 56 there, 56 there, 56 there, 100 here. And, you know, you have to have multiple stacks of orders in order for them to stop the price from rising. So that's another way to look at things. And that's exactly what happened now. So do I expect a reversal at 2680? No, we went above the ADR high, which was my level for shorts. And we went very quickly there. And, you know, I don't think this is going to stop. So now we are effectively in an outlier day. You know, the next level for me would be 85, which is, you know, 60 ticks higher. But do I think that this is a great long here? Well, no, because the risk profile is terrible, right? So where would I need to put my stop in order to minimize the possibility of getting stopped out? All the way down here, 26.67. Is that an intraday trade? It's a swing trade. But for intraday, there's nowhere else where I can put my stop. Why? Because it's going to get stopped out if they do a stop run, right? Why would I do that? You know, this is what we mean. Can we limit risk somewhere? And then some people would say, but you have these little things there. When you're looking at the lower lows and higher lows as your potential to limit risk, is there an extra swing away from that? Or is it just a move that went up and created a bit of speed bump on the way? So went up, consolidated, went up. Whenever I'm validating a swing for risk purposes, I don't want to see this. I want to see this. So you go up, you go down, this becomes a relevant swing low, you go up. So anything you do from here, you swing low, would be here. And similarly, swing high, if you were shorted, would be up here. You know, anything else like this just looks like it's gone. Even this one is a little bit suspect. This wave down, it's a bit suspect. So you need to ensure that the swing that they've created is actually an established swing, that it's not just a speed bump. Otherwise, you're just asking for it. You're just asking to get stopped out because you're putting your stops at really suspect locations and then complaining that you know, the market is shit and that they're hunting your stops. No, your stops are at a terrible place. Like, no doubt about it. If you get ticked out, that's a bad stop placement. Because everybody was able to figure out that that's where most people's stops will be. Now, for me, whenever I have a reference low, I never put my stops. And again, I see this so much. So somebody enters a trade, like let's say you entered somewhere up here, you went for a breakout of the previous high, and you entered here, and then people put their stops there. And, you know, that's just like asking for it. If I was looking at taking a position, I would actually be putting my entry in the lower quarter of this thing, but then my stop wouldn't be going right there. My stop would actually go like this. So even if they do a stop run, I'm still in a better position. Right? That's the difference between a strong stop loss placement, which would be this, and a weak stop loss placement, which would be this. And some people are like, oh, it's a cheap trade. Yeah, but you're asking to get stopped out. Like, that's just... If you do this in crude oil, they're so going to take your stop. They'll just be like, oh, thank you for the extra liquidity. That's brilliant. You know, in some more trending instruments, like that are thicker, like especially ES or something, they don't do it as much, but it still happens, right? So this is why stop loss placement is so important. And similarly, you know, if I was going to do a short earlier, before we got the invalidation of the move. And I went, well, actually, I am going to go short. Never mind this. I'm going to front run it, right? We're going to front run it. And then let's do a stop loss to limit risk because cheap trade, right? Let's put a stop here. It's like, oh, it's cheap. Yeah, but look where they went. They just smashed right through it. Why? Because it was the recent high. Everybody's looking at that. Everyone can see it. It's like, yeah, it's a recent high. We get it. So what are they going to do? They're going to take it. They're going to take it, right? This is why I like to use my disaster stop of about 35 ticks usually, right? So when I enter the first position, my initial stop loss is 35 ticks, but I also aim for 70 as my default target. And that puts me in a better position. So even if they smash through it, smash through the high of the reference that I'm looking at, I have time to figure out what I'm going to do with it. So was it just a stop run? And are they still reversing? Or are they just pushing? And that's when, the art of looking at what the candlesticks actually look like, whether there's wicks, whether there's negative delta, positive delta, because all of that sometimes gets into the whole analysis of the position as well. And then you're able to go, okay, well, there's still some selling wicks here. So yeah, they did smash through the high. What's the trend doing? Well, it's still looking up. So is this a good thing? Probably not. Let's get out. It gives me time to figure out whether I'm going to stay in the position or not. And for the most part, allows me to cut my risk in half because I will very rarely stay in for the entirety of the 35 ticks of an initial disaster stop. Why? Because I have ways to figure out if the position is good or not. But that goes hand in hand in how good of a quality your stop loss placement is. And if your stop loss placement is completely shit, yeah, that's going to come and bite you, Or you're going to have to exit positions really quickly because that's all they're good for. Your position is not strong enough to withhold any sort of a stop run. You won't survive. Whereas my positions survive for hours and hours on end. So, I've frequently run trades that are anywhere from 2 to 4 or 5 hours long. You don't get that easily if your trade location is bad and if your stop loss placement is bad. But that there are some pointers that you can use in order to make your position stronger. Don't put your stops at the immediate highs and lows that are obvious to everyone, even if they were partially sighted. Okay, step 1. Step 2: don't put your stops at round numbers. That's step 2. So instead of putting it at 2680, if you want a short, put it up at 2683.7, like a very random number. Or if you're going to go long and you don't have a good way to limit risk to the upside or to the downside, again, use a random number to the downside, like 2677, 1 or something. A level that is not a round number. And then in crude oil, there's another trick there because it moves in quarter cent increments. So try not put your stops at 0.25, 0.0, 0.50, and 0.75. Try to do it in between that. Ideally, if I'm doing a crude oil trade, so let's go back to crude oil for a bit. And let's say I have a level. Right here, we would have 68. Let's say, we're wagging around the round number of 68. Well, my stop for any shorts would be up at 35 or 36, 37. My stops for longs will be down at 67, 70. Maybe 67, 66. Okay? So just like a random number where it's not super obvious for them to kind of smash through it. Because the first round number would be 68 to the downside. Next one would be 75. So if you put it at 70 or 66, even if they reach that, it's going to, you have to find some sort of an options level, obviously. But usually there's a reaction from the market makers that are trying to hedge their positions at those points. So knowing that, knowing like the mechanistic action of how they operate and what levels they get involved in, it can kind of save you a lot of the times from bad stop placements. So that's something to take away. And it works the same way on equities. You know, if we go to NQ, yes, this is my live account, and I don't pay for equities there, so I can't show you that. But it's the same thing. If you have a round number of 6,500 or 20,000, you know, in NQ 20,500 or 20,800, those are round numbers, right? So they're not going to be affected. So I mean, they will get affected if you put your stops there, but you know, they are important numbers where price is expected to go to. That's what I'm trying to say here. And if you put your stops there, I always say you're just asking for it. All right, let's see if there's any more things that we can do before we finish it up. It doesn't look like... doesn't look like we're going to get any setups for the London session on Monday. And again, gold just kind of crawling, really. It's not really looking that great for any side for me. And let's just quickly run through maybe copper. But again, I said copper is not that lively. Yeah, that's pretty dead. Okay, yeah, so it doesn't look like I'm going to be finding a trade right now. So I'm going to have a look in a few hours after NY cut, which is post 9 a.m. Central. So I want to let you know that whoever has done 5,000 in payouts, you can... join the payout club, but only if you're in the US. So keep that in mind. You can get a pin and a hat if you fill out this form that I just dropped. And we also hit 100,000 members on Discord. I see somebody's asking about the ladies VIP group. We are still talking about it. So... again, nothing concrete yet. There'll be more news in January, so I can't really say much. JSim says, good morning, got into platinum last night. Nice one. Platinum went on a nice run and carried on. So that's a nice trade there. I usually sleep around about the time when that happens, and I need my sleep. So... unless it's like FOMC or some sort of a thing, I don't really like running overnight positions, or, you know, we're in a very particular space. Like last week we did a crude oil swing trade for like the first time in half an age. Yeah. Sarah Sprague, yeah. I figured that was you, Sarah. Yeah. Because you mentioned dogs, and I was like, that must be Sarah Lucas. Okay, and if you want to come and join us on TopstepTV and, you know, share your story, do a bit of trading with us, that usually happens in Back to the Futures segment, which I'm actually going to be on this week, I think with Paul H. Don't know whether Paul is here today. But if you want to come and join us, fill out this form that I just dropped. And yeah, maybe we can hang together, get to know each other, hold hands, sing some kumbaya, and yeah, help you grow further. Luciana says, Eurex on Topstep when? When Eurex? I don't know, man. Your guess is as good as mine. There is a post that you can upvote, and, you know, I keep saying to people, please upvote the post. And people are sort of upvoting, but not that many votes. It's over 200, and it says it's planned, but unfortunately they keep they keep changing it. So I'm just trying to get to the actual post that I was looking for. There we go. No, that's not it. Just give me a minute. I'm going to give you the Eurex posts. For some reason, I seem to have lost it. So I don't want roadmap. I actually want feature requests. What's going on there? All right, so there is a post from someone. So if you click there, you will see this page, right? And since then, the author obviously moved on because they were like, yeah, screw this. I'm not going to wait for it 10 months ago. So it's basically somebody nearly a year ago asked for Eurex, and it got, you know, it got a fair number of interests and upvoters. But we're still sitting only on 205. In order to push this further, we really need to get this over 400. So until that happens, they're going to keep pushing it. And we will never get DAX, and you guys are going to run away to trade with, you know, trade elsewhere. Because there's unfortunately one other company, well, basically two. So they do have it, and it's not the best choice. So I would really want to see Topstep bring Eurex, like even if it's like through TraderTainment or something. Like just bring us Eurex, man. Like, you're killing us. Because that's my main product for London. All of this stuff, it's very difficult, and it's not consistent enough. Like one day, once in a blue moon, every 2 weeks, you get great moves in gold and platinum and everything. And then nothing. And then again, one day, oh, we're trending out of hours. Brilliant. And it's always something weird. Whereas DAX just keeps doing its like 200 ticks in the first 2 hours. And then you look at all the other ranges and you're like, God, it's only 74 ticks or 50 or 34. And it's like literally like trying to get blood out of a stone on a lot of the days. So it's not easy trading out of hours instruments on like every single day when people are like, oh, you don't really trade. So I do trade, but I trade, you know, London specific products. And if nothing's moving, or it's sluggishly moving, I don't want to sit in a trade that's going to go for 30 ticks in the next 3 hours. If I'm going to sit in a trade for 3 hours, I want 160 to 200 ticks from that, right? So that's just, you know, how I see my time being spent. I'm not going to sit here for 30 ticks, yeah? If I want 30 ticks, I can always trade something that's very quick. You know, you can always sit in RBOB for, you know, 5 minutes. That's going to get you 30 ticks. You can also lose 30 ticks, but... so yeah, you know, if I'm going to put my time into something, I want the number of ticks to be proportionate to the time that I'm sitting in a trade. Otherwise, what are you doing? Just sitting there losing your eyes. Justin Perini says, missed a good one on copper today, but on practice trade looked good, so put one on the real account. It started to draw down too much for me as I'd just blown 2 accounts and I'd forgotten about the practice account. Yeah, so copper has been doing this thing where if it moves, it will move for a time, and then the next session is super quiet. And actually, I think crude oil has done the same thing. Like if you have a really good out-of-hours session, it's usually an indicator that the main session is not going to be that great. So gear, I can see you're in here. Just, you know, yes, it might retrace for the New York Open, but it's likely that on my observation and my experience of what I've seen it do, that it's actually not going to be that lucrative. All right, so gold is actually turned around. So just for the end, you know, typical, we come to the end of the stream and suddenly you get a setup. So it reclaimed that little ADR high. So I'm going to try running a short trade here. And I'm only expecting that to go down to 73, maybe 72, but it's not going to be the biggest trade. So I am going to do a short on micro gold. Again, 35 ticks. Actually, let's do it a little bit more because it's the stop needs a little bit more room here. Random number, 82.1. And then we should look for just over 1-to-1 here. This is not going to be the biggest trade. And what am I looking for here? Because I'm going to get off stream in a minute. So we need to stay underneath this ribbon first and foremost. Eventually, I also need to see this white line and the yellow line rising up. And this blue and pink area to be mostly pink. Once that happens, and if we get a flush down, once that's over and the yellow line falls, I'm out. So that would be my exit. This could run to overnight VWAP. However, this is effectively now an auction fade, which has a stopping point, like the final stopping point around initial balance high. So it doesn't have good probabilities of turning into a complete failed auction because it's an auction fade. We're a little bit too far out from the initial balance to run like some massive trade. It's possible, it does happen. I call those hybrids, but this for me is an auction fade, and therefore that doesn't bring that many ticks usually. So we have possibility to make about 50 ticks here. And again, if the flush doesn't happen pretty quickly, I'm going to take it off early. This is also one of those trades, if I was in with bigger size, like if I was in with 3 lots, I would be taking it, partialing it, because it's a scalp. It's not a swing trade that you can run forever and ever. So once I get to about 25 ticks, so halfway down, I will be moving my stop to break even, because again, scalps have lower probability of turning into massive trades, and you have to protect yourself. Okay, we're almost there. So I just give it a little bit more time, and then I'll be out of here and out of the trade as well. One thing that you might want to do at this point, just to stop it from coming back completely, is to do my partial, where you would get a stop market buy in the middle just to lower the downside a little bit. Again, I'm not going to do that on micros because it's like not that much cash. But if I was in with bigger size, I will be utilizing that. All right, so I'm going to still monitor this, but I do have to go because I do have some other things to take care of today. But yeah, so I've given you the exit. I've given you the, when to move your stop. So basically you're looking for half the amount to your take profit target as your signal that we're far enough just to move your stop to break even to protect the position. Anything before then, you're not protecting anything. You're just increasing the likelihood of getting out of the trade. Anyways, yes, John Nielsen says gold is just a pullback. Yes, that's exactly what we're looking for. Just a pullback, little mean reversion, and then we're going to see what it does later on in the day. I'm going to sign off now. So thank you for hanging with me. Upvote that Eurex trade, Eurex posts. Obviously give us a like, give us a subscribe. Caress the like button. Hopefully we learned something new. This is more of a class at this point rather than super active trading. And let's continue doing this until we can get, DAX, hopefully at some point. So that we can have nice trades that do have a lot of juice behind them, and they have some more committed trends and they don't mess around. Okay, so I'm going to see you tomorrow. I'm also going to be on Thursday and Friday for Back to the Futures, and then also on the Reversal Challenge on Friday. So you'll be seeing quite a bit of me this week. Until then, this has been TopstepTV. I'm Deeyana Angelo. Enjoy the rest of your day and take it slow for Monday. Take care.